Hello, everyone, and happy Friday. It is that time of the week. It's time for the Security Token Show, everyone. We're your hosts. I'm Herwig, and of course, I'm joined by Kyle. How are you this week, Kyle?
Oh, yeah, Herwig. I'm doing great. I'm back from Denver, fully recovered. Everything's going well here on a Friday, the Ides of March, and we are now fully into 2025. It's crazy how time flies.
Get ready to head on up to New York City next week because all eyes are now on Digital Asset Summit, right? So we've got a great show today, great interview over with Figure, as well as we've got a special guest on the show for the market movements and so much more great news. So why don't we get right into it?
Let's do it.
Hello, Emanuele Rossi. How are you, my friend? Welcome to the show. It's Friday. You're here from Mountain Protocol. We originally knew you previously from Coinbase, worth sharing, everybody. For those of you who don't know, Emanuele, how are you doing this week, man? Happy Friday.
Yeah, all is well. Good to see you guys. Happy Friday. Good to be here for the audience. Awesome work with all the production and all of the new looks for the show, guys. Congrats. We know each other for some time, and it looks like the program is getting better and better by the day.
You've seen the evolution, man. And special thank you for everybody who's watching or listening. You're going to get to catch Emanuele at Tokenize This as well next month. So make sure you go grab your ticket, folks. But man, what a week. Another huge week of news. Why don't we start over with some Mountain Protocol? What you have anything to share?
Yeah, so there was an exciting update yesterday. We just announced a big partnership with Ledger Enterprise and Ledger. For those who don't know, which I would be surprised if there is many that don't know, Ledger is one of the leaders in digital asset custody and security. They provide different type of self-custody solutions, hardware wallets for consumers and so forth. And they also have a very comprehensive enterprise business that supports exchanges, custodians, and large institutional players with any of their custody needs. So we started working closely with Ledger a few months back when I first joined Mountain Protocol, and we finally announced our partnerships. A lot more cooking in the back, and we're very excited for what we will be able to achieve together. And for us, when you think about crypto, it's about self-custody, it's about that self-sovereignty over your financial assets. And Ledger has, of course, been a leader both from a positioning perspective, from a branding perspective, from a product perspective of that ethos. And so working with them and really being able to bring a new set of financial services powered by Ledger, powered by Mountain is very exciting. And we're looking forward to working with them over the years.
Yeah, I think Ledger is one of those household names, and it's quintessential to have that support. So that just makes the story for Mountain Protocol all the more successful. And I actually want you to tell us a little bit more about USDM, just as to how you differentiate yourself in the growing market of stable coins and yield coins. It's been the hottest topic, I think, maybe this year or even for last year. And USDM is on fire right now, but there are still some people who have not heard of you guys. So maybe if you could just offer a quick breakdown just for those who don't know you.
Sure. So USDM and Mountain Protocol are very straightforward businesses. Mountain Protocol is the issuer of USDM. It's a regulated permissionless yield-bearing stablecoin. It's actually the first regulated permissionless yield-bearing stablecoin. And the idea behind it is very simple. We've taken the barrel-tested stablecoin issuance model pioneered by a company like Circle or Paxos, where you take a stablecoin that is fully reserved, over-collateralized by treasuries. We've improved on that Circle model using prudential regulation and applying bankruptcy remoteness to the issuance phase. And then we've kept the permissionless dynamics. It's a simple ERC20 token that is composable and can be moved around the crypto network as needed. And the big enhancement really came in the form of the rewards, meaning that holders of USDM not only have access to a digital dollar, but through the same digital dollar, you effectively now have access access to the risk-free rate of the United States government thanks to the USDM rewards. And the powerful aspect of the token is that it doesn't matter for us who you are. It could be a sophisticated institutional investor, could be someone with a MetaMask wallet in the middle of nowhere. Doesn't matter. As long as you hold USDM, you're going to be receiving daily rewards directly in your wallet. No staking, no claiming of the yield, no lockup. Simply buy, hold it, and receive the daily rewards. So for us, the goal and the vision is really not to be a crypto. It's really not to bring to market speculative assets. It's to bring to market the safest, most useful dollar in the space that can be used by sophisticated institutions as well as by retail investors and consumers alike. And we are doing a lot of work with all different type of market participants, blockchains, DeFi players, CeFi players, fintechs, payments companies, and so forth. And I think we are very well positioned for 2025. Maybe a quick comment on the differences, and let me know, Herwig, if you want to add anything.
Please. I think it's helpful.
Yeah,
Kyle might have a hot question for you.
I've got a question. You know what?
Yeah. Do you want to ask it now?
No, feel free to add your color if you want.
Yeah. So in terms of the outlook of the market and just the different type of products, since you quickly mentioned it, there is a lot of stable coins and yield coins out there. I think it takes a little bit of nuance for the market to analyze them, understand them, and basically put the pieces together on how they fit within the broader crypto ecosystem and more, really. And I would categorize them in three buckets. Mainly, you have stable coins, crypto dollars, essentially products like USDC, USDT, USDM. You then have tokenized securities, products like BDOL, like USYC by Ashnot, now Circle, and so forth. And then you have what I call synthetic dollars, tokenized strategies, products like Ethena, and so on. All of these products are similar in the sense that they might have a dollar format, they might pay interest or rewards in some capacity, but there is a lot of nuance around how these products integrate with the crypto network. Is there any permissioning? Is any whitelisting of addresses required? Can they seamlessly integrate with CeFi, DeFi, and everything else? What risk are you taking when you're holding one of these assets? Is it treasury risk? Is it, private debt risk? Is it trading risk, right? There are very different structures. And that's a great thing about crypto, right? And digital assets in the end is the flexibility and the ability for everyone to launch different products and experiment. But I think for the average person and the average investor, it's always good to get educated and really do a little bit more research and digging in terms of what's going on with the assets that you're holding. So maybe that's a quick comment, but Kyle, happy to take the other question.
Yeah, no, well, look, we're really happy that you're here. And obviously I like to ask fun questions and kind of deep diving questions, but it's all friendly here. The question I have for you, I think, is why would someone want to put their yield-bearing stablecoins onto a hard drive ledger? Like if I understand the perspective from like a Bitcoin, like, take your Bitcoin off Coinbase, keep it in your cold storage wallet. Why would I want to do that with a fiat stablecoin? And could you talk to me through how that yield gets paid? Like if I remove my stablecoin, if I take it offline, do I still get entitled to the yield that gets created from it? How does that process work? And why would I even really need that if I'm planning on spending it?
Yeah, I think generally speaking, the rate of crypto adoption in the United States for real world use cases is probably lower than in some other markets. And we partner with many firms in Latin America and Africa, in Southeast Asia and so forth. And they have built plenty of consumer applications and fintechs that really rely on stable coins for daily checking accounts, savings, spends with card and so forth. I don't think that the United States is there yet at this point in time. We're definitely headed in that direction, but I'm prefacing the question with this answer because in the US or in developed markets, at least, I don't think yet people would use a ledger, let's say, as a consumer type of bank account. I think we are headed that direction. I think that if you ask the ledger team, that's probably how they think about themselves, where ledger effectively becomes your day-to-day wallet for your checking, your savings, your crypto. It's all within this platform. And I think, you can experiment and think about ways in which you could potentially use this wallet down the line, right? Nowadays, you go pay for a coffee, you tap your iPhone with Apple Pay, and you're spending, dollars or whatever it is. I could see a future where you go to Apple Pay or to a counter and you tap your ledger and you're paying with your stable coins or with any digital assets that you're holding, right? So I'm saying that this because we are headed in that direction, in my idea. And I think if you ask many other people as well, whether it's through Ledger, whether it's through a Phantom wallet, whether it's through a specifically designed consumer application used to spend stable coins, again, the future could look very different, but the idea of relying on digital assets as primary transaction tooling, let's say, it's there. So,
so it's really like Ledger would be almost used in replacement of a bank account, and that's where you would need your interest-bearing dollars for a long-term kind of savings style.
And it could be Ledger, it could be again a Phantom, it could be a MetaMask, it could be any type of digital wallet, right? Potentially in the future, there are going to be banks that are going to have their own wallet application as well that will run on stablecoin rails. So, it's really about having a tool that you can use to save and, hold dollars. Many people trust them already to custody digital assets. Stablecoins are in some capacity.
The one question I have, just to piggyback off that and then to go back to Herwig, is if I lose my hard wallet, do I have opportunities to KYC or connect my identity so that if my wallet gets lost, I'm not out my savings? Obviously, part of the value of having a bank is that you have this kind of umbrella institution that makes sure that you don't screw up yourself. So I think that I've seen a lot of hacks of hard wallets. I've seen a lot of lost hard wallets. Is that still kind of a pervasive issue with a US dollar backed asset? Is that something you just you need to be aware of? You need to understand the risks and all those types of things, or are there other countermeasures we can do?
Yeah, that is correct. At this point in time, at least, there is a self-custody solution. And, it's like if you're holding USDC or USDT on Ledger and you lose it, you're going to lose your private keys, you lose access to your coin. So it's the same concept. But again, as this technology becomes more consumer friendly, there is going to be guardrails and, same type of frameworks that banks and traditional financial institutions have in place to prevent this type of problems. It's a matter of timing and infrastructure, but I'm very confident that we're headed in that direction.
That's actually going to be my question for you on that note, right? We've seen SAB 122 and a lot of OCC updates. Are you starting to see sort of banks approach you guys saying, hey, we'd love to see how we can collaborate? Or are they, mostly not compatible with the way you guys are operating today and sort of with your Bermuda-based infrastructure?
Yeah, I would say that there is a lot of interest from banks. I think you don't need to take my words. You just need to look at the interviews of someone like the Bank of America CEO announcing that they want to play in the stablecoin games, or you just look at JP Morgan where they have their own, stablecoin, for lack of a better term, because that's what it is, to run their own internal payment operations called JP Morgan Coin, built on their own internal blockchain called Kinexis. There is other players that are doing similar things. I think Citibank also has their own type of token services and stablecoin services for their internal operations and so forth. So banks are definitely interested. I'd say there is still a lot of unknown in terms of regulation, what it would look like and how these players are going to be able to participate in the space. Aside from regulatory, I think there is, in my view, still a bit of unknown on the technology side, how that will look like, what type of experiences are they going to be supporting that rely on stablecoin. But again, there is a lot of excitement in the space. It's definitely one of the buzzwords of the last few months. So there is a lot of attention from all of these players.
Banks don't have the greatest reputation when it comes to building technology, I will say. So this may be where the opportunity of the fintechs and the USDMs of the world are able to offer that value. And I think it's exciting, exactly the picture you painted, right? You guys are bringing, financial infrastructure, in a box, essentially, to be able to allow something like Ledger to evolve into a bank account and a wallet type solution. So I'm very excited for that future one day, because you will be able to, it's not if, but when you will be able to Apple Pay your way with USDM out of Ledger. That's coming. I believe it for sure. And by the way, speaking of this super fast evolving market, we saw earlier in the year that Circle acquired Hashnote. They're now moving, they say, operations to Bermuda, where you guys, once again, first movers, you guys are a big proponent over there. How do you feel about this news since we have you on the show? It's interesting. It's obviously a bit of a competitor now that they're trying to kind of come on your turf, it feels like.
Yeah, so maybe just as a disclaimer, I used to be a Coinbase, and Herwig mentioned it earlier. So, big fan of Circle, of Tether, all different type of stablecoin programs, because they pave the way for adoption and for these digital dollars to really become the bloodline of crypto markets, digital assets markets, and more going forward. So again, a lot of respect for all of these companies. I'd say that Bermuda is, for those that don't know, it's a very established traditional financial markets regulator. They regulate large part of reinsurance services out of the island, and a very strong law. For this reason, it's a key jurisdiction for this type of markets and this complex type of financial products. Regarding digital assets, they're also a very forward-thinking regulator. And to give folks an idea, and this is all public information that you can find on the Bermuda Monetary Authority website, Coinbase, Circle, Zero Hash, Kraken, and others all have licenses to operate out of Bermuda and to run their global operations from the jurisdictions. We also have licenses in Bermuda. We have the most sophisticated one that you can get. Actually, it's called a Class F license. Regarding Circle, again, they have been operating or have had entities down there for quite some time. It's interesting to see them move USYC, Hashnote's operations down there. We'll see exactly with time what that entails. There is potentially some, benefits around flow of funds, permissioning associated with the assets and so forth. I think time will tell still in terms of what that would look like, but it's certainly a good development, and it reinforces our vision that Bermuda is a tier 1 regulator for digital assets.
No, that makes a lot of sense. And speaking of sort of tier 1 regulators, are you at all optimistic about the incoming legislation and support, let's say, around stable coins? Do you think it's all a little bit the cart before the horse before we start to see a lot of that really, take fruition? What's your take on the fact that, the US is starting to say embrace finally stable coins?
Yeah, I think we're very bullish on the United States as a whole. They're the biggest beneficiary from stablecoin adoption, especially USD stablecoin adoption. There needs to be consideration and carefulness, let's say, when shaping some of these bills, because you are juggling local issuers, companies like Circle and others, with outside of the US issuer, companies like Tether that still add a ton of value to the stablecoin ecosystem and so forth. So I think it's going to be interesting to see how things shake up eventually. But all of the right folks are having all of the right conversations with people in DC on these various topics. I would say specifically for Tether that they are really the pioneer of stablecoin. I'm a big fan of Tether, of course, because they are Italian heritage and origins. A lot of people in their team are Italians, and I am as well, of course, so I have a bigger respect for them. And I would say, just as a little corollary, that when people talk about digital dollars, they don't think about any stablecoin other than Tether. If you go in any emerging market, if you go in any place where stablecoins are used for real-world transactions, Tether is, at this point, really the only game in town. Tether on Tron, it's a big example. And in the end, it's about what people want and about what companies want, and it's clear that people at this day and age see Tether as the digital dollar. So, I think we need to be very careful and thoughtful when putting together this type of legislation, especially because, again, Tether plays such a big role at such a grassroots level in the global economy that it's important for us, I think, to nourish them and make sure that they can have a role in the future US regulatory regime as well.
Yeah, well, I love that accent, so you're going to be back on the show more just for that. But I completely agree with you. I think Tether has kind of laid that way. It's fascinating to see where the market is headed and growing. I think it was like $2 or $5 billion at the start of 2020 for stable coins. Right now, well over 200 and growing. So But we've got even more market movements here. In fact, one of the big ones, it was not the first. We actually know that went to Hashnote, but it is a big deal because it reclaimed the throne of number one, and it is the only product now, yet again, at $1 billion, which is BUIDL. So BUIDL has officially hit $1 billion, folks. We've got 4.4 billion in yield coins today. That is growing very, very fast in comparison to stable coins, however you want to kind of track them back to at the end of the day. But I think the acceleration is only going to increase, as I've been saying, due to on-chain reserves, which, by the way, side note, USDM does a great job of. But the idea that we can actually track stable coins and make sure they have a security backed by products like this is incredible. And I think is going to continue to lead to huge growth in this sector. So congrats to BUIDL for hitting $1 billion. And Kyle, Emanuele, I'd love to hear your thoughts on this sort of significant milestone, I guess we'd say.
Yeah, $1 billion is no joke. And I think it's cool to see on that screenshot. We see a couple billion in total on a lot of these types of assets. I only think that's going to continue. It makes total sense. We've talked about this before, Herwig, on the show, that the stablecoin business model of just issuing out a stablecoin and then keeping all of that treasury yield for yourself seems to be one that is leaving the industry as users have gotten wise to this model. So I think that this is going to continue to eat some of the stablecoin, what would you call it, the market share of the traditional stablecoin. I wonder how potential legislation changes this moving forward as well. Are these assets considered something different from a regulatory capacity than just a traditional non-interest-bearing stablecoin? A lot of these things are still yet to be seen, but it makes total sense to me that a lot of this yield would be shared with the underlying providers as opposed to just solely kept by the issuer. Emanuele, what are your thoughts on the interest-bearing stablecoin products?
Yeah, so I would classify something like BUIDL and Hashnote as tokenized securities. We actually rely on BUIDL as part of our collateral for USDM. So we really love what they've built and are active users of their product. It's going to be interesting to see what role in the ecosystem over the next few months. I don't think the dust has settled yet there. We see something like BUIDL as a treasury management solution, as a collateral solution for us. We use as collateral for bilateral transactions, with prime brokers, exchanges, and so forth. But I think there are a lot of use cases that are not necessarily covered by a tokenized security where stablecoins have a big role to play. So we'll see again what ends up doing what. But congrats to BUIDL, congrats to all of the issuers. It's exciting to see all of the adoption of these products.
Any predictions for these securities sort of M2 markets that we're looking at for the end of the year? We're at 4 billion today. What you got?
Oof. Good question. I don't like to make predictions. I'm never been good, but I'm gonna say up and to the right probably.
I think it's gonna cross 10 billion by the end of the year.
Yeah, I think it's going to be significantly more, but we'll see. A couple bit more cool news here to talk about. We saw that S&P did yet another rating on this time the centrifuge Anemoy product, a centrifuge powered product that's now ran by Janice Henderson, which apparently got a pretty good rating. So that's cool to see. I always love seeing these happen because I think it's important for the industry, especially after we saw what happened in past stablecoin issues. And the same thing could happen with these securities-based yield coins, which is we need ratings to bring investor confidence to make sure these these products are legit and can be scalable for the market. I think S&P has been doing a phenomenal job in doing that for the market. And I'm not just saying that because they're also going to be speaking at Tokenize This, folks. So definitely hear what they have to say next month. Any thoughts on this one, guys? It's the highest rating, I believe, that they can give out for this category.
I love this. I think that, seeing rating agencies actually rating blockchain-based instruments is something we've been tracking on the show for many years. And S&P is coming along to it. They are continually rating highly rated assets with, blockchain-based instruments being a positive component to the credit rating and credit evaluation, which I think is correct from a objective perspective, but it's also fascinating to see. These are some of those things that really drive institutional adoption that may not directly, constitute a price increase of the crypto or may not represent buy side, but some of these more, ancillary services that adopt, embrace, and understand what's going on with respect to the technology. These are some of those keys to driving the innovation and doing things the way that TradFi would do them, just in a more efficient way. So I like this, and it's cool because as far as I understand, this is the first rating that we've seen that is using multiple different blockchains. They know specifically that funds tokens are issued on ETH, on Base, on Arbitrum, and CELO. And so they weren't scared off by multi-chain assets, which is another kind of main topic Herwig and I have covered in the past. The blockchain that they use doesn't seem to be a huge, scare for a rating agency. I think that's certainly the big thing of note here.
Yeah, and maybe just my 2 cents, the S&P guys, the Moody's guys, they're all doing great work around ratings, and there is a dire need for this type of clarity, whether you're an institutional investors or other. Just understanding what is the risk associated with an asset is such a basic requirement for general investments, right? And you're starting to see crypto players also providing this type of clarity, whether it's products like Blue Chip, which for folks who don't know, it's a stablecoin rating agencies and more. There is a lot of education taking place in the space, and it's as important as the product issuance and the distribution. So very exciting to see all of the work from these guys.
It really is. And we're big fans of the Moody's folks too. We have a great webinar with them on STM TV on our YouTube, folks, if you want to go check that out. But that is all the time we have right now. Emanuele, thank you for coming on the show. It was great to see you. And I guess we'll see you next week since you're based up in New York City, right?
Yeah. Thanks for having me, guys. Great to see you. Excited to attend the conference that you're hosting in April. Everyone should get a ticket. Last year in Miami, it was great. A lot of builders and key players in the tokenization space. So make sure you don't miss it.
We're looking forward to having you back on the show again soon as well. And with that, we've got actually an interview here with Nick Carmi from Figure. So let's get on to that.
Welcome back to the Security Token Show interviews. This week we have Nick Carmi, VP of Institutional Markets at Figure Markets. Nick, how are you today?
I'm doing great. Thank you very much, Jason, for having me on your show. I greatly appreciate it.
Oh, my pleasure. Thanks for coming on. We have a lot of news that's come out of Figure recently in the last few months, but the one of the more exciting ones is your YLDS yields, publicly registered yield generating stablecoin here that you guys have, or yield coins as we call them here. But tell us a little bit about what this product is really. And I do want to dive into a question, but tell us real quick in a couple sentences, what is the YLDS product?
Yeah, I mean, it's been a 3-year journey for Figure Markets to get this done. And finally we're here. If you think about yields, what is yields? I mean, yields is an interest-bearing stablecoin that functions as a fixed income security, right? It's based off a security called a certificate that's been around for many, many years. The beauty of certificates is that they're peer-to-peer transferable. Why did we create yield? Why did we start yields? We wanted to create a stable coin that is regulated under as a security, but also that pays interest to the holders. Currently, if you hold YLDS, you receive SOFR, which is the bank and the interbank rate minus 50 basis points, which is a lot better than holding any other stable coins, which yields you 0. And that's the other key feature of yield YLDS as a security that distinguishes itself from money market funds or other funds that generate yield is that yield is peer-to-peer transferable. That's the beauty of the certificate.
Got it. So, and that actually kind of leads into one of my questions, which is there's a lot of structures we've seen in yield generating assets, yield coins. We've seen 40 Act funds, private placements. What really drove your decision to go full registration? Because as you mentioned, it is a long process. I'm just curious to see what other factors were built into that.
I mean, I wasn't here to go into exactly why Mike Cagney and the Figure team wanted to do this, but I can assure you it had to do with, hey, we want to create a stable coin that is regulated, and we wanted to create a stable coin that will reward the clients back in the form of interest. If you hold any stable coin, that exists in the market right now, you will earn zero on it. You would have to take that stable coin and go invest it by buying cryptocurrencies or lending it out and earning a yield. So there is risk inherent in you holding other stable coins. Our YLDS will automatically give you interest on a monthly basis. It's the one thing that we believe in, and you would hear this time and again from Mike Cagney. He any interview you see with Mike, truth over trust, right? It's you trust the other stable coins about what you're doing, right? With yield, it's the truth because it's regulated and we have to comply with it.
Got it. And another note on that one though is we've seen other assets that are transferable and they pay 4 to 5%. Meanwhile, we see that yields right now is at around 3.82%. So why would an investor buy into this specific product? I want to learn more about the differentiator here.
Yeah, look, the other products are not transferable. The other tokenized money market products are not transferable. Remember, there is a money market fund that exists, and somebody created a digital token of it. And you invest $1 in the digital token, somebody takes that $1 and invests it into the money market fund. There is that extra hop. When you own that tokenized money market fund, right, you still have to go back to the issuing party. So if you own, it might be securitized, you might have to go to this transfer agent or Oasis Pro. It depends on who is managing the tokenized money market funds. With ours, it's a true peer-to-peer transfer. It's a security. It's the first digital security of its kind, right? There's no exchange for it. It's not like there's no CUSIP for it. If you're familiar with securities in the TradFi, every security have a CUSIP associated with it. Ours doesn't have any of the above, and that makes a big difference. If you're holding a tokenized money market fund, you can go and buy coffee with it. You'll hear Mike Cagney say that all the time. If you're holding YLDS, you should be able to go and buy coffee with it as long as the Starbucks or whoever, 7-Eleven or whoever it is, can actually accept yield into the infrastructure, which they should be able to.
Got it. Yeah, other things we've seen.
And the other thing I want to add,
sure.
The other important thing, yield doesn't have a minimum, right? Some of the other tokenized money market funds, they have minimum investment criteria. We don't have a minimum. You can buy $5, $20, $100, $1 million, whatever you want. There's no minimums. That's another beauty. And it's available globally to everybody. Some of the tokenized money market funds that exist are not available to US investors. They're only available to offshore investors or vice versa. Yield is available to everybody.
Got it. We've seen, Benji, that's peer-to-peer transferable. We've seen WisdomTree try with their card, right? Their debit card that is kind of linked to your tokenized assets. It sounds like Yields is trying to be a little bit more native and cut out some steps.
Absolutely.
Here. So I do want to transfer over to other questions here. Obviously, as you mentioned, it took 3 years to do this. What were some of the biggest challenges or takeaways from a regulatory perspective to get this approved?
Look, I mean, again, I wasn't part of that journey, but having dealt with the SEC and the regulators in the past, every time you go to the regulator with a new product, right, especially a product within the digital asset space, right, I don't want to say it's a challenge, but it's a journey. You got to spend a lot of time with the regulator, explaining them why we're doing this, what's going to happen, how it's going to work. They need to understand it. They need to understand the risk inherent with it. What does it mean for the investors? What does it mean for the people? And whether it's an institutional investor or a two-legged investor. And again, don't forget with last year and the year before, the regulators were not as, I would say, as friendly or as friendly within the digital asset space. So that's what I think we're able to push this through. Again, the product is very different from everything else, and and it's a quality product. It works the way it's supposed to work. Yes, the yield might be small, might be less than what you currently earn on a money market fund. But if you go to 4 or 5 years ago, money market funds were earning 2% and 1%. So that's a difference. I mean, I think SOFR minus 50 is a very good number if you compare it. We're thinking long term, and also you can use it for anything you want.
Got it. Quick follow up on that, and then I do want to ask a little bit more on the regulatory side. But as conditions are changing in the markets, how do you think the next 6 months, for example, will go in markets, and how is that going to affect the SOFR and yield generating aspect of yields?
I mean, are you talking markets in general, financial services, and digital assets, or one or the other?
I mean, overall, right? Whatever is going to
look, rates. I mean, the idea is that rates are going to continue going down, right? I mean, it's like 6 months ago, you were able to buy treasury bills, short-term treasury bills at 5.25, and now you're at 4.25, and they're going to continue going down. If I look at the 10 years is yielding 4.3, 4.5%, I think, but it's not trading at par. It's trading at 102, so it's trading above par. So there is a view that rates are going to go down, and if you hear the new administration, they're definitely pushing for that to happen. On the digital asset space, I think this is the year when digital assets are going to explode, and it's going to be a phenomenal year, as has been evident since coming into this year from last year. There is a lot of positivity going on in the market. A lot of people are doing great things. Clients coming in. I can tell you, a lot of my friends that for years were like, "What are you doing in digital assets? What's Bitcoin? What's Ethereum? What are you doing now at Figure Markets?" They're like, "Hey, how do we get in?" Right? There is a lot more interest. I mean, you have ETFs now. Who would have thought they were going to have Bitcoin and Ethereum ETFs? Right? I mean, that's incredible. So I think, look. Rates could go down. That's okay. Our intention with yields is not only to be able to pay back the holders an interest rate, but also to allow them to benefit from having a stable coin-like security product that they can earn something on it while they are transacting with it. Like none of the other stable coins do this, and that to me is a very powerful thing.
I appreciate that. I'm going to pause here. For anyone watching on the Security Token Show, we are going to move on to the next section of the show. But if you want to watch the rest of this interview, it'll be on STM TV on YouTube over at STM TV Official.
Wow, Kyle, what a show already. I love how alive this market is because we've got tons more articles to discuss, don't we? My gosh. Well, let me kick it off here with some lending articles, Kyle, because we've been talking about this. I mean, we've been talking about everything in tokenization for, that's what happens when you've been talking about it for 5 years straight. But lending is, of course, one of those things that I think is really going to unlock RWAs, tokenization, to a whole new level. And now it's starting again in a more proper way with Bitcoin. With Cantor Fitzgerald announcing that they are offering Bitcoin-backed loans, and they're partnering with Anchorage and Copper to support that. So that's, I think, a very big deal, especially since we know that Howard Lutnick is now part of sort of, the administration, and he was originally running all of Cantor Fitzgerald. And we've got some more news on the lending side. Rome Protocol and Keychain have partnered on their cross-chain lending, specifically targeting Latin America, Kyle. So what do you make of this?
Yeah, look, lending is a huge market now and into the future. I think there are two main theses for why lending is huge. The first one is for some of these asset appreciation opportunities like owning Bitcoin, things like that, where you have this asymmetric potential upside. The big thing here is you don't want to sell your Bitcoin, but you want to get cash on it, right? You want to be able to use that float for some reason. If you have a big treasury of underlying assets, you want to have the upside exposure while still being able to deploy. This is not necessarily anything new in these markets. We see it all the time with large, CEOs that own big positions in their entities, their tech companies that go public. They then take a line of credit out on these things. I think it's beautiful that Cantor Fitzgerald is the provider here, not only because they are a large institution, but they also are the auditor, I believe, of Tether, USDT. So they really do understand the digital asset landscape and ecosystem. So it feels like they are in the perfect position to offer this type of product on credit and to be able to evaluate the risks associated with doing something like that. On the other side, I think that lending for securities, for tokenized assets, is actually potentially the path to liquidity, because many of these private securities may be illiquid because the demand isn't necessarily there, but there should be a market for somebody willing to lend against it, even if it's at a low value. Maybe you only lend 30% of the asset or 50% of the asset. You could be getting the asset half off if that person defaults on their loan, which could be really compelling, especially for a real estate property or for an equity or something like that. So I do see lending both being an opportunity for these established crypto assets, as well as the path to liquidity in the short term for securities and the less liquid assets as well.
Totally agree with you, Kyle. I think this is what's going to lead to a huge rush of people basically finding an asset they love. Real estate, I think, being one of the hot ones to use as an example here. And they're saying, I love this asset. I'm going to buy some, take a loan out, buy some more, and keep that going until they're happy with their position. Then suddenly you're going to start to see a lot of money move into these markets, and DeFi can eventually unlock what could be a true liquidity pool for a lot of these assets, perhaps even the smaller cap ones. So we also saw some big announcements, Kyle. Securitize not only hit the 1 billion mark with BUIDL, close to 2 billion across their whole protocol, as they call it. Well, I don't know if I would call it protocol, but they've originated across multiple chains, almost $2 billion, and now they've tapped Redstone for their on-chain price feeds. Okay, so this is basically an Oracle partner for specifically BUIDL and Accred, the private credit fund by Apollo. Going to be leveraging Redstone's price feeds. So Wormhole for interoperability and Redstone for price feeds. No Chainlink love here, Kyle. Must kind of want to point that out here.
Yeah.
And then Mercado Bitcoin announced the fact that they're going to be issuing 200 million, almost 200 million in assets this year, targeting Latin America, tokenizing on Polygon. They've been issuing fixed income and private credit on chain over in Brazil. And I think this is just a beginning for Mercado Bitcoin, since now they're focusing on RWAs. We know, Kyle, that their team has a background in traditional finance as well, one of the largest crypto exchange in Latin America. I think that is just a perfect recipe for success for RWAs. But Kyle, any thoughts on these announcements?
No, absolutely right. Mercado Bitcoin, we know Alex Nascimento, the professor out at UCLA, friend of the show, is on the board there. And he's talked quite a bit about how they are continuing to expand into the RWA ecosystem. And so this is exciting for me. It seems like they're putting a lot of firepower behind this. He's told me in the past, if anybody has listing needs for RWA tokens, they want to be involved. So reach out to us if you have any opportunities, any leads there that want listing. Mercado is open for business, and they are putting their money where their mouth is, focusing on some of those credit opportunities to start. And you made a good point about Redstone being the Oracle provider here, as opposed to kind of the industry stalwart of Chainlink. From an Oracle perspective, it is interesting how they chose Redstone. I know that there have been some frustrations around the industry around Chainlink's services. So I wonder if this is just kind of another drop in that bucket with respect to someone looking to work with a smaller, more nimble firm that can prioritize some of these things, as opposed to kind of the industry, established firm that may or may not be as innovative anymore. Who knows?
Well, I will thank Sergey for pulling up to the White House and representing this topic. So
That's right.
But moving on from that, we do have some tokens, folks. So don't go anywhere right now. It's the good stuff. We got Meta Wealth saying they've officially launched their 10th asset, double digits. What's up? Congratulations, Meta Wealth. It's a Wyndham Grand La Cala Golf Residences. That's over in Spain, folks. So this is real estate on chain. Go check it out. It's on Solana too. DGFT has officially tokenized an Invesco private credit strategy fund as well, a senior loan strategy fund, and it's on Arbitrum, folks. So very interesting development there. Securitize, not the only game in town closing big asset managers. And of course, it's worth mentioning that the Bahrain exchange, ATME, has officially launched a gold-backed token. So we've been announcing this on the show for well over a year, but I got to say, really, these last 3 months, Kyle, there's been a real surge in gold-backed tokens, I feel like. And this is now backed by the Central Bank of Bahrain and the official exchange over there by ATME. I think that's a big deal. And last but not least, Kyle, we've got a Serbian solar park yielding 6% interest. Very interesting if you want to go invest in Serbia. Kyle, what are your thoughts on these token offerings?
Yeah, so some great token offerings.
RWAs, no cryptos. That's right.
Some great token listings. Really wanted to shout out Meta Wealth. We've had them on the show before. Congratulations, a 10th listing. That is fantastic. The main focus will be how do we drive as much investment to some of these primary offerings as possible. That's why flicking over to the Invesco private credit offering, that's live, and they have been successful in private credit deals. I love to see that one. DigiFT has been very active in the tokenization space. So I think those two definitely caught my eye, as well as the Serbian solar park, just because they actually have fundraised. So they have raised over, I think it's 600,000 euros. So around $600,000, give or take 25 or 50K, which is about 80% of their offering. So they've been able to successfully raise this for renewable energy, and they're targeting a 6% interest on that deal. So it's a good one. It's lower interest than we've seen from other products in the market. So to see this still get fundraised and be successful, I think is a really positive sign for the tokenized market.
Totally agree with you, Kyle. What another week of news in the RWA world. Tokenization is hot, hot, hot. And Kyle, that means we have to pick some companies of the week. But before we do, one quick update from the RWA Foundation. Okay, everybody, it's time for that weekly update on the RWA Foundation. It's our organization of over 30 partners focused on the RWA industry. Our goal, united to bring together crypto natives and bridge tokenization to DeFi as well. So very exciting news updates coming soon. In fact, I will give you a little bit of a teaser today because I know everybody's been hanging on, but there's a lot of behind the scenes work as you all have been checking out our roadmap. I'm sure there are some very big announcements that you got to stay tuned for coming very, very soon. But it's great to see all the love and support we're getting on social media and in our Telegram. Some great discussions in general, just with other crypto natives and about other token offerings to discuss with everybody. So come tap in and check us out and learn more about what we're up to from reading our white paper, which is available at RWAF.xyz. You can go learn about our new initiatives, our plans for our Wally DAO, which I can't share everything yet, but want to give you a little bit of a glimpse to bring Wally to life. And that's all I'll share for now. Maybe a little bit more next week. But for now, please come give us our support on X, on Telegram, and everywhere else. But let's get on with choosing our companies of the week.
What today's show, Herwig, we were stacked with news. I think we covered 15, 20 articles. We had amazing interviews, guest contributors. And we didn't even have Nico this week. So we still have more to look forward to in next week or the week after show. But without further ado, we could never end our show without the longest recurring segment, my personal and Herwig, maybe you too, favorite segment on the show. That is the Companies of the Week. It is the most important award in the entire industry. You see, New York Times best-selling author. You see Nobel Prize in economics, and then you see Company of the Year winner. Okay, ladies and gentlemen, these are maybe the three most important awards in the entire world. The Presidential Medal of Freedom pales in comparison to the Company of the Year award here on the Security Token Show. And that's because each week, Herwig and I take two companies that we wanted to highlight for doing something really great, whether that's innovative, whether that's noteworthy, whether that's a great accomplishment. We sometimes like to give awards to first-time winners, making sure that newer companies get the recognition they deserve. Sometimes we give it to larger companies that are making deeper impact just due to their balance sheet, due to their access and distribution. Even occasionally, Herwig, you've given it to regulators who deserve the recognition for the work that they're doing. And so I do think we really covered the map here in giving this award out to the winners that we think are truly deserving for a variety of reasons. And of course, to win the Company of the Year award, it is one company picked from the around 100 companies that we select throughout the year during the Companies of the Week segments. So without further ado, Herwig, I'm so happy to have you here. Would love to hear your thoughts on Company of the Week.
Well, Kyle, I would honestly give it to the team we're working with that's helping us bring Wall to life there, because that's honestly been an incredible journey, and I can't wait to share more there. But they aren't tokenizing anything, which I have to give it out to Invesco, because they are. And they are a massive asset manager. Invesco's AUM, let's look it up real quick. What do we got here? Over $1 trillion. Looks like almost $2 trillion, Kyle.
Jeez.
That is a lot of money that could be coming on chain. Okay. So at this point, I don't think there's really any $1 trillion asset manager that isn't looking at tokenization, but many of them have yet to get in the game. And now you're seeing the trend of private credit. There's a senior loan strategy in this case that's now coming on chain. So I think we're going to see much, much more of that this year as well. But congratulations, Invesco, as well as all the partners, DGFT, putting themselves on the map big time lately with all their licensing and partners, as well as Arbitrum, who I expect maybe we end up seeing this Invesco product end up its way into the STEP program. Who knows? But Kyle, Invesco, for leading the way, for hopefully everybody else taking notice for what they're doing here, and hopefully wishing them a lot of success here. Invesco is my company of the week.
Herwig, I think it's a great winner. And while you were describing that, I think it's interesting. I live here in Miami. I know that many of our listeners maybe live internationally. We also have many people that don't necessarily live in like a target city like New York that has deeper insight into this. It is a great example of why the US market is the holy grail for a lot of this stuff, because it's just the most liquid market in the world. And I just, you look at Invesco, and many people may have not heard of them before. Invesco, excuse me. You may have never heard of them before, or you may have, this might be a firm that you've heard of once or twice. Oh, they're just a couple $1 trillion in assets under management, like no big deal, right? Like you look at, there's very few firms around the world that can boast multiple trillions in assets under management. And of course, it's a very US thing to have this type of firm be the company that you've just never heard of before. And so a major shout out to Invesco, obviously not saying they're flying under the radar, but there's just many of these types of firms, and why it's so important to do these things the right way, to embrace the laws and regulations around the world, but specifically in the United States, just because of the leverage that this market has. So I think it's a great choice.
Well, Kyle, it's not only my choice. So tell us, who's your pick of the week?
Well, my pick of the week is actually, this time I wanted to give it to a smaller company. And I really do have a particular bias to picking winners that have been successful in their offerings. And no shade to anybody that just focuses on the primary side of the offering, bringing new listings to market. That's obviously a very, very important part of this process. We need more deals in this market. But what I really like to highlight here on the Companies of the Week segment is companies that are able to actually get deals done. How do you bring capital into this industry? How do we bring liquidity into the market and justify the tokenization use case? And for that reason, I do want to give it to AVR Solar Park. They are the solar farm behind the tokenization in Serbia for solar projects. They're yielding 6% dividends on their tokens. They've raised over 80% of the fundraise so far, raising over $600,000, focusing on renewable energy. So I think it's a great project to do solar and to drive solar innovation. It's a successful project from a fundraising perspective, and they used tokenizations in Serbia. So I think this is a fascinating industry, a wonderful use case of a small market industry in solar, as well as in a smaller market in terms of Serbia. They were able to use the tokenization use case to bring this capital markets opportunity to the world, and they were able to do it using tokenization. So I think that for all those reasons, this is kind of exactly what we talk about when we talk about democratizing access to the financial markets. This is one of those use cases that we can point to and say, yeah, it's successful, and it's a great tokenization example.
I think that's awesome. I think that's an absolutely great pick for so many different reasons, but it is, as you just highlighted, a great poster child for tokenization here. Successful offering, solar. I mean, Serbia now on the map. This is the global movement we're talking about. 6% is better than some of these yield coins and treasury rates that are being offered here. So maybe an interesting opportunity for some. Of course, do your own research, folks. But that is all we have for you this week. We hope to see you again next week. And in fact, if you're in New York City, hit us up. We'll both be there so we can find some time to chat and hang out, especially if you're a trunkie and part of the herd in the RWA Foundation. You might just get a little bit of special info. But we have to mention that Tokenize This isn't that far away, nearly just a month now, folks, where we will all be in New York City, all of the biggest leaders in the tokenization industry, all of the players, all of the participants, everybody in one room to do commerce, learn, and move this industry forward together. So get ready for some special announcements from us as well. Kyle, any closing thoughts on your end? Any news from Global Settlement Network?
Well, look, hit us up. We're going to all be in New York. Herwig's going to be there. I'm going to be there. Ryan Kirkley, my partner on Global Settlements, also going to be in New York. We're taking meetings. We'd love to chat with any banking institutions. The big thing for us is that we're kind of evaluating a lot of those banking sandboxes and a lot of those kind of trial environments. Would love to start working through stablecoin settlement and commodities trade with any financial institutions. Checking it out. Hit me up. Would love to chat in New York City.
Well, with that, everybody, STM.co, we've got all the latest trading info, a heck of a lot more data than anybody else. So go check it out. And with that, happy tokenizing.